What's your sense of the market movement we're seeing right now?
Good morning, Alishia. I think the market is really basically flat. The early euphoria at the beginning of the year has kind of died down, and what investors are doing is picking up, especially for the beverages sector and the banking sector, trying to take positions. As you noticed, there's a lot of movement in First Bank shares yesterday. The price moved up slightly, but the real big gainers are actually in the conglomerates and food and beverages sector, especially the companies like UAC, Unilever.
Especially in a context where the banking sector is mired in much controversy right now. We've seen the CBN trying to enforce a law to tenure the limits of, or to limit the tenures of CEOs of banks operating in the country to 10 years. The broker I was speaking to yesterday saying that at that stage, the jury was still out as to whether or not it was a good or bad move. Now that we've had some time to digest, what's your overall view of the recommendation that's been made by the central bank governor?
I think it's an interesting recommendation. I think it points to really two things. Firstly, the central bank is really saying that they don't really have that much confidence in the boards of these banks, because generally you expect tenure to be done by the boards on behalf of the shareholders. By central bank putting through this policy shows that they don't have as much confidence in the boards of the banks. I think secondly, it's interesting because there's been a lot of talk about it being retrospective. Normally you look at retrospective laws in terms of criminal cases, and you say, well, you can't put in retrospective laws for criminal cases. But this is not really, it's a bit of an admin function by CBN. And CBN can argue that they do have the right to step in the public interest, because banks do take public depositors' money to step in and try and bring some order. I think the next few days will be interesting to see whether the CBN governor, without the president being around, to be able to force it through. If he can, it might be a good step. It might be a good step in the right direction for the Nigerian banking sector.
The question is, though, isn't this a dangerous line to be crossing, in that you're now entering into the mechanics of a private sector? And while it may be, with the mindset of keeping public interests at heart, is the move warranted? That's the ultimate question at this stage.
Yes, I think a lot of analysts are saying, oh, look, let's look at the Western world, developed economies, they don't set tenure. Yes, but in most of the Western banks, the bank MDs do not have significant stakes in the banks. So you have to look in the cultural concept that we have in Nigeria, where a lot of the banks, the bank MDs have a lot of influence in terms of shareholding, as well as influence in the banks themselves. So CBN is trying to say, like, look, let's try and limit this influence, because generally from what they've seen in the last year or two with the revelations from some of the banks, it's been a negative influence. And let's try and limit that influence, empower the board, and empower other areas of the bank to ensure that the MD is not all powering. So I think if you look from that angle, you can say it's a good move. So, affecting the private sector, yes, but banks are generally different from other sectors of the private sector, because banks take the public money. If any bank should fail, millions of depositors will lose their cash, and that will have serious effects on the economy as well as the political situation in Nigeria. So that's why central bank has to deal with banks in a slightly different way than it would deal with any other private company.
Kayode, in your opinion, what is this doing to the central bank governor's reputation, whether it be within the banking fraternity or amongst investors themselves?
I think the central bank governor is showing that he's not afraid to make the hard decisions. Some might argue that with the ongoing recapitalization process going on, the 8 banks that were taken over, that this is not bringing such a big ruling as this so early on is too quick, and that you should let the capitalization process go through first, then bring in another solution after that, settle down. And throwing so many balls in the air might lead to confusion and might lead to delays, because we're still waiting for the AMC to be passed, and that was expected before Christmas. So there's a very strong argument that way. But I think the underlying theme is that the central bank governor is not afraid to make hard decisions that might be unpopular with some certain banking elite.
Already we've seen this new ruling would see 3 of Nigeria's bank CEOs be forced to leave their seats at the helm in July. What has been the share price reaction of those companies involved there, that being Zenith, United Bank of Africa and Unity Bank as well, just looking at yesterday's performances on the bourse?
Okay, I think the third bank is probably going to be Sky rather than Unity. But on those three, UBA, Zenith, and Sky, is actually quite interesting because during day trading, their shares actually increased. I mean, UBA increased by about 43 kobo, Zenith about 10 kobo, and Sky about I think 5 kobo. So there were slight increases in the shares of those three bank MDs who are affected, which might suggest that shareholders are not too displeased about the ruling. Then again, it might be that they haven't digested the information yet.
Let's take a look then at the food and beverages sector. As you said, it's been gaining a lot of attention of late. What would be a stock pick for you within that space?
In the food and beverages sector, especially, I would look at the likes of rather than food and beverage and conglomerate sector, rather like likes of UAC, Unilever, PZ. Those companies, despite the downturn, they've been showing strong profit growth, strong revenue growth as well, and they just seem to be providing excellent results in the market as it is, and they're good safe stocks as well.
If we take a look at your breweries, we know that they've always been popular, whether they be in good times or bad. Nigerian breweries versus Guinness, what are you looking at?
There are two stocks which are similar to an extent. I mean, Nigerian breweries has always been one of the top stocks in Nigerian Stock Exchange. They have very strong brands, they have a very strong distribution network, and they seem to be growing their revenues at a very strong rate. And they seem to be updating their business model. I think they're trying to put in a new distribution platform which will help distribute their products more, and they're looking to expand into more areas of the economy because on a per capita basis, the drinking consumption in Nigeria is actually low compared to South Africa and also some of the Western world. So there is space for growth. While Guinness Nigeria, the Guinness brand is quite strong. They're 250-year rebranding exercise, which to celebrate the 250 years of Guinness, went quite well with the concerts and the PR publicity they put in place. And Guinness is a very well-known brand in Nigeria, and it's a very strong brand in Nigeria as well.